On the morning of January 7th, they did something no one thought was possible, and by the time you realized what was happening, it was already too late. 11 minutes. That's all it took to destroy $500 billion in wealth, to wipe out retirement accounts, college funds, and life savings, to prove that everything you thought you knew about fair markets was a lie. I'm going to tell you what really happened that morning, but I need to warn you, once you understand how this worked, you'll never look at the financial system the same way again. Let me take you back to 9:31 a.m. Eastern Time. Silver was trading at $97 an ounce, the highest price in modern history. Investors were euphoric. YouTube was flooded with predictions of $200, $300, even $500. People were mortgaging their homes to buy more. The silver squeeze was real, they said. We finally won. And then, in a single second, everything changed. The first block hit the market at 9:31 in 12 seconds, 1.4 billion ounces, dumped onto the futures exchange like a bomb. The order came from JPMorgan's commodities desk. Sell everything, right now, at any price. Within 26 seconds, silver dropped $6. Traders stared at their screens in disbelief. This wasn't normal volatility. This was something else, something deliberate. By 9:33, the price had fallen to $84. That's when the first margin calls went out. Thousands of retail investors, people who'd borrowed money to amplify their bets, suddenly owed cash they didn't have. Post it now, or we liquidate your position. Most couldn't move fast enough, but JP Morgan wasn't done. At 9:34, the second wave came. 1.7 billion ounces, another market sell order, the same desk, the same ruthless execution. Now the price was in free fall. 97 to 79 in 3 minutes. The chat rooms went silent. The celebration turned to panic. What's happening? Why isn't it stopping? Here's what most people didn't understand in that moment. The circuit breakers were supposed to kick in. Automated systems designed to halt trading when prices move more than 5% in 5 minutes. They exist for exactly this reason, to prevent crashes, to protect investors. But they never triggered. Not at 5%, not at 12%, not at 30%. The system that was built to save you just stood there and watched you burn. At 9:39, JP Morgan released the final wave, 2.1 billion ounces. This was the death blow. The order book was already empty. Every buyer between $90 and $70 was gone, consumed. What remained were scattered bids, desperate, thin, terrified. Silver hit $58, then $47, then $38. People were screaming into their phones. Brokers couldn't keep up. The liquidations were cascading now. One forced sale triggering another, like dominoes made of human lives. And then, at 9:42, it stopped. $31.40. A 68% collapse in 11 minutes. The circuit breakers finally activated. Too late. Far too late. 340,000 retail accounts were destroyed that morning. The average loss per account was $410,000. Some of these were young families, some were retirees, some were people who'd spent years building that position, believing in something real. Gone. All of it in 11 minutes. But here's the part that makes your blood run cold. This wasn't an accident. It wasn't a flash crash caused by a rogue algorithm or a technical glitch. This was planned, carefully, precisely, with the full knowledge and approval of the people who are supposed to protect you. Let me show you how deep this goes. 18 months earlier, JP Morgan had been on the other side of this trade. They were short 6 billion ounces, betting against silver. But in 2024, when silver started rising, they were forced to cover. It cost them everything. Margin calls, emergency funding from the Federal Reserve, a near-death experience. And when it was over, when they'd finally closed their short position, everyone thought JP Morgan had surrendered. The manipulation was over. Silver was free, but they didn't surrender. They adapted. Starting in June 2024, JP Morgan began buying. Quietly, gradually. Over 18 months, they accumulated 4.2 billion ounces, futures contracts, physical metal, call options, everything. They bought at an average price of $73 per ounce. They spent $36 billion assembling the largest commodity position in history, and their buying pushed the price higher, which attracted retail buyers, which pushed it higher still, which attracted hedge funds, a perfect feedback loop. By December 2025, silver hit $95. The mania was complete. JP Morgan sat back and watched. They'd built the trap. Now they just had to spring it. But here's what makes this truly evil. They didn't just crash silver to take profits. They crashed it to make money on the other side. 3 days before the massacre, JP Morgan bought $12 billion in call options on the stock market, a massive leveraged bet that stocks would surge within 1 week. And when silver collapsed on January 7th, the stock market exploded higher, because if silver crashes 68%, that means inflation is dead. The fear is over. It's safe to buy stocks again. The S&P 500 rose 4.2% that day. JP Morgan's options gained $31 billion in value. In 1 day, they lost $34 billion on the silver liquidation, but they made $31 billion on stocks, $19 billion on short positions they opened during the crash, $17 billion from selling call options to retail traders that expired worthless, $11 billion from buying liquidated positions at the bottom and flipping them an hour later. Total profit? $47 billion, the largest single-day gain from market manipulation in financial history. And it was legal, approved, authorized. Because 3 days before the crash, there was a meeting. Federal Reserve headquarters in New York. Jerome Powell, Janet Yellen, Jamie Dimon, CEO of JP Morgan, and senior staff from the National Security Council. It wasn't on any official calendar. It was held in a classified facility. No documents, no emails, no record. The topic? How to neutralize silver before it destabilizes the dollar. By January 2026, silver had become more than an investment. It had become a threat. China was accumulating. Russia was accumulating. The BRICS nations were treating silver as an alternative to the dollar, a hard asset that couldn't be printed, a foundation for a post-dollar world. The Federal Reserve looked at this and panicked. If silver went to $150, $200, it would validate the idea that the dollar is dying. It would accelerate de-dollarization. It would undermine everything. So they made a decision. Crash silver violently, make it so terrifying that no one would ever trust it again. But the Fed can't directly intervene in commodity markets. That would be illegal. So they needed a proxy, a bank with the resources and the moral flexibility to execute the operation. That bank was JP Morgan. According to sources present at the meeting, Powell's request was explicit. We need you to crash silver. Use whatever means necessary. We'll provide regulatory cover. No enforcement action will be taken. This is national security. Jamie Dimon agreed. 3 days later, it happened. And when the circuit breakers failed to activate during the crash, that wasn't a malfunction. The CME was instructed to override them. Let JP Morgan complete the liquidation without interruption. The official explanation called it a technical issue due to unprecedented market conditions. That's a lie. The system was turned off by humans, on orders from the government. Now think about what this means. $500 billion in wealth was destroyed that day. Retail investors, hedge funds, pension funds, mining companies, all of it transferred to JP Morgan and the insiders who knew what was coming. And why? To protect the dollar, to send a message. Do not bet against us. We have infinite capital. We have the Federal Reserve, and we will destroy you. Silver wasn't killed by supply and demand. It was executed by decree because it threatened the system. Here's the part that should terrify you. China was planning to buy 6 billion ounces in January 2026, a $500 billion purchase designed to corner the market and cripple Western industry. U.S. intelligence intercepted the plan in late December. The Fed's preemptive strike worked. China put the operation on hold. They're watching now, trying to figure out if the market is safe. The answer is no, it never was. So what happens next? Silver might bounce to 45 or 50. Traders will try to buy the dip, but everyone knows now. If silver approaches 100 again, they'll just crash it again. The playbook is exposed. You can't invest in an asset that can be destroyed by government decree. You can't build wealth in a market where the rules disappear when you start winning. The silver squeeze is over, but the manipulation, it's just entered a new phase. The phase where they don't even hide it anymore. 11 minutes, 68%, 4.2 billion ounces. I have the trade logs, I have the timestamps, I have the proof, and if you were holding silver when it happened, you just learned the most expensive lesson of your life. The game was never fair. The system was never broken. It's working exactly as designed to protect the powerful, to destroy the outsiders, and to maintain control at any cost. They won, you lost, and they'll do it again the next time you forget who's really in charge.